We got your requests, and today we're diving deep into, say, Renewable energy, say ours.
That's right. We're looking at their consolidated financials and the activity report for the first 9 months of 2025.
And this isn't just about crunching numbers, is it? We're really trying to understand this major Turkish player in the global renewable energy supply chain.
It really is. And we have to start with something absolutely critical, especially for anyone comparing these figures internationally.
Okay.
It's the accounting standard. All these numbers use TMS 29 inflation accounting.
Ah, inflation accounting. That's huge in this context. So maybe break that down. What does TMS 29 actually mean for an investor comparing, say, 2024 and 2025?
Well, it means we're adjusting everything from the past, revenue, costs, everything, to today's money, specifically as of September 30, 2025.
So it levels the playing field against inflation.
Exactly. It strips out the effect of just rising prices. So if revenue looks flat in these reports, it means their actual business volume, the real physical growth, hasn't really changed much, even if prices went up.
Right.
We're looking for genuine performance here.
Got it. So our mission today is to cut through that complexity, look at their strategy, their health, and figure out if SEIS is genuinely growing or just, benefiting from price increases.
And if you find this kind of detailed analysis useful,
Yeah, please do hit that like and share button. It helps more people find these insights. Okay, let's start with the basics. Who is SEIS? We know they're in Kemal Pasha, Izmir, two big production sites.
right, but their story is really about a big shift, a pivot.
How so?
Well, they still have their subsidiary, say Kurumsal Kimlik, that's the original industrial advertising side, 95% owned. It's fully consolidated in these numbers.
But that's not the main event anymore.
No, not at all. The real focus now is renewable energy equipment. We're talking complex, high-spec stuff. Internals and externals for wind turbine towers, generator components.
So high-value manufacturing.
Definitely. And high quality, too. They've got the ISO standards, the EN certificates. It shows they're a serious industrial supplier. It's a tough market to get into.
Interesting. And looking at their team size.
A slight adjustment downwards, actually, from 293 people down to 276.
Not a huge cut, but maybe a sign of efficiency focus.
It could be. Now, let's talk about who's actually running the show.
Right.
The ownership and governance structure here is really key.
Okay.
It's crucial for any investor. When you look at the shares, it's not just about the number of shares someone holds. It's about voting rights.
Right, I saw that. Erkan Güldoğan has about 22.6% of the actual stock, but controls almost 46% of the votes.
And Erkan Güldoğan, around 20% stock, but over 41% of the votes.
So between them...
Between them, because of their special A group shares, they control roughly 87% of the total voting power.
Wow. So decision-making is very concentrated.
Extremely. They hold the reins tightly. Decisions can be made very quickly, which might explain some of the strategic moves we'll get into.
Good point. And the board itself?
5 members total. And it's worth noting, 1 out of the 5 is a woman. So that's 20% female representation on the board.
Okay. And what about executive compensation? How are the top managers being paid?
Seems like there's some cost awareness there, too. The total benefits for senior management over these 9 months came in at about 12.4 million Turkish lira.
And how does that compare to last year?
It's actually a slight decrease in real inflation-adjusted terms, down from about 12.9 million TL in 2024. So, looks like some cost control even at the very top.
All right, so we have this tight control at the top. How does that translate into strategy and operations? You mentioned exports are key.
Absolutely key. Foreign sales make up 51% of their total consolidated sales. This company is built around exporting.
And they seem to have some clever strategies, especially regarding the U.S. market.
Yeah, this is really interesting. They supply GE under a specific agreement, right? But the U.S. has those Section 232 tariffs on these kinds of goods.
Which are really high, aren't they? Like 50%.
Exactly, a 50% tariff. Normally, that would just kill your competitiveness in a market.
But somehow SEIS manages it.
They do. And this is a huge competitive edge, something you really need to understand. The reports state that, contractually, the customer pays those tariffs.
The customer pays the 50% tariff. That's very unusual.
Highly unusual. It basically shields SEIS completely from that major trade barrier. It lets them keep supplying the U.S. market reliably.
They're still getting orders.
Yep. $8.89 million in purchase orders from the U.S. just in these 9 months. It suggests their quality or reliability must be really high for the customer to agree to absorb that cost.
Okay, that's the U.S. What about Europe? There's a good deal with Enercon, right?
Yes, the Enercon partnership is fundamental. There's a framework agreement aiming for potentially 35 million euros in revenue through mid-2027.
And are they seeing results from that yet?
They are. About 10.5 million euros came in from that Enercon contract just in this 9-month period we're looking at.
So it's already delivering significant revenue.
And they're not stopping there. They're collaborating on new parts for Enercon's newer, bigger turbines, the 7MW models. That's already led to another 1.8 million euro contract. They're embedding themselves deeper as a development partner, too.
Makes sense. To handle all this expected business, they must be investing, right?
Heavily. There's a big capital expenditure program, CapEx. Machinery and equipment investment backed by an investment incentive certificate totaling 228 million lira.
So building capacity for the future contracts.
Exactly. And alongside that, there was a significant real estate purchase, 110 million lira for a factory site, bought from a related party, Ateşçelik.
Related party transaction, always something to note.
Definitely requires scrutiny, but it does secure their physical footprint. And internally, they're also investing in efficiency, upgrading their ERP system, digitalizing the warehouse with barcodes and management systems. It's all about getting ready for higher volumes.
Okay, let's get to the financial performance itself. 9 months of 2025 versus 2024, all in constant inflation-adjusted lira. This is where it gets.
Interesting. Because the top line, the sales revenue,
It actually went down, in real terms, from about 1.62 billion TL down to 1.41 billion TL. That's a drop of over 200 million lira. How is that possible if things are going well?
that's the million-dollar question, isn't it? Or, well, the 217 million lira question here. Yes, inflation-adjusted sales are down. Gross profit also slipped a bit, kind of in line with sales, from 382 million down to 333 million, mostly driven by the renewable energy segment in this specific period.
So on the surface, it looks like a contraction.
On the surface, yes. But you have to dig deeper. Look at the efficiency.
Okay, where do we see that?
Look at the core operating profit. Ethos Faliad Kara. Despite lower sales and gross profit, this number actually increased
Increase by how much?
by 4.7%. It went up from 305.6 million TL to 319.9 million TL.
Wait, how do you increase operating profit when your sales are falling?
Excellent cost control. That's how
Okay.
two main things happen. First, they really slashed their commercial costs, marketing, sales, distribution expenses. Those dropped significantly from nearly 100 million TL down to 75 million TL.
Okay, that's a bit saving.
Huge. And second, they had a big jump in what's called net other operating income. That also gave the operating profit a significant boost compared to last year's real figures.
So they became much more profitable on each lira of sales they did make, and they cut overheads.
Precisely. They managed the operations much more efficiently.
And then we get to the bottom line, net profit for the period,
And here's the big surprise. It jumped massively, up by 66%.
66%. From 83.1 million TL to 137.9 million TL. How does that work after lower sales?
This is where that inflation accounting story comes full circle. The reason for the huge net profit jump lies below the operating profit line.
Okay.
It's almost entirely down to how they manage the impact of inflation on their finances. Look at the line item for net monetary loss.
Net monetary loss.
In 2024, inflation hitting their cash and monetary assets cost them a massive 223 million lira loss. A huge drag.
And in 2025.
They managed to cut that loss dramatically, down to 111 million lira.
So they basically avoided 112 million lira of inflation damage compared to the previous year.
Exactly. Their treasury team, their financial management, did a much better job protecting the company from the macroeconomic environment. That saving flowed straight down to boost the net profit.
So the big net profit jump wasn't really from selling more stuff, but from much better financial management in an inflationary environment.
That's the core story on the profit side, yes. Superior financial protection. Now, let's shift to the balance sheet. This shows us the foundation they're building. Total assets are up, looking healthy at just over 2 billion lira.
And what stands out there?
Inventory. It nearly doubled. Jumped from about 226 million lira to 426 million.
Wow, doubling inventory. Is that a red flag? Like, they can't sell stuff.
Not necessarily in this context. Given the big Enercon contract and other orders, it's much more likely they're actively building up raw materials and components for those future deliveries.
Stocking up to execute, basically.
Exactly. Positioning for execution. And that ties into another big move we see in their cash management.
Which is?
They completely got rid of their KKM holdings, the currency-protected deposits.
Okay, explain KKM for listeners again.
Sure. KKM was basically a government scheme, a type of deposit account designed to protect lira savings against devaluation. Very safe, very liquid, but maybe not the highest return.
And Sayas had quite a bit in KKM before.
They did. About 217 million lira worth at the end of 2024. Now, it's zero.
Zero. So they cashed it all out. What does that signal?
It signals a clear shift. They're moving away from just defensively protecting cash towards actively deploying that capital.
Likely into that big 228 million lira capex investment we talked about.
That's the most logical connection, yes.
Yeah.
Putting the money to work in the business itself. And interestingly, even after liquidating KKM and likely spending on capex, their actual cash and cash equivalents still increased to 292 million lira.
So cash position remains strong.
Very strong. But the most impressive indicator, for me, of operational health improvement is the operating cash flow, OPF.
Right. Cash flow from operations. How did that change?
Dramatically. In the first 9 months of 2024, they actually burned through cash from operations, a deficit of over 90 million lira.
A significant cash drain.
Yes. But in the same period in 2025, it completely swung around. They generated a positive cash inflow from operations of 26.2 million lira.
Okay, that is a critical turnaround. Going from burning cash to generating cash from the core business. That shows real improvement, doesn't it?
Absolutely. It shows much better working capital management. They're turning those improved operating profits into actual cash much more effectively.
What about debt? Did they take on more loans for the investments?
Total financial borrowing is up slightly to about 282 million lira.
Yeah.
But interestingly, the increase is mainly in short-term debt. Long-term debt actually decreased a bit. And overall, their equity base is strong, up almost 13% to 1.17 billion lira.
So leverage seems manageable. And one last thing, FX risk. As a major exporter.
They're very well positioned. They maintain a strong net foreign currency asset position, about 259 million lira worth. Meaning, when the Turkish lira weakens against the euro or dollar, which it often does, their balance sheet actually benefits structurally. It's a natural hedge built into their business model.
Okay, so let's try to synthesize all this. What's the key takeaway for you, the individual investor looking at Sayas right now?
Well, if we connect this to the bigger picture, Sayas looks like it's firmly in an execution phase. Yes, those inflation-adjusted sales dipped in this specific period.
Which might worry some people initially.
Right. But underneath that, the company showed much, much better internal efficiency. Core operating profit went up, which is impressive.
And the cash flow turnaround is huge.
Absolutely critical.
Yeah.
OCF swinging from negative to positive is a very strong signal of improved operational control and working capital management.
And the net profit surge, while heavily influenced by better inflation management rather than sales growth, still shows financial resilience.
It does. And crucially, you have those long-term contracts like Enercon. You have that unique tariff situation in the U.S.
Yeah.
And you have that massive CapEx investment. They are clearly building the engine now.
To handle potentially huge export growth in the near future.
That's exactly how it looks. The foundation seems really solid.
So here's the final thought, maybe the provocative question for you to consider. They've made that big 228 million lira bet on new machinery. They've freed up all that capital from KKM, putting it to work instead of keeping it safe. The question is, how quickly will we see the results of that investment? How soon will those efficiency gains and that increased capacity translate into higher production volumes and start pushing those inflation-adjusted sales figures back up again in the next reports?
That operational follow-through, turning investment into output and sales, that's the real test for Sayas as we head into 2026.
A fascinating company, definitely one shifting gears from planning to pure execution.
Indeed. Well, that wraps up this deep dive. We hope this analysis gives you the edge you need.